Morning, everyone. This is Dan Hussey with AlgoDayTrader.com, bringing you our London session recap and quite possibly the weekly recap for AlgoDayTrader.com. It is August 30th, 2013, and it is currently 1 hour before the NYSE Open. Let's begin with the FTSE and the DAX. The DAX, stepping out to our 4-hour time frame, we are looking for a full halfway back long to trade on a 4-hour time frame. The daily long has traded an extension, traded back in June when the S&P as well as the FTSE traded theirs. It's drawn from a high from July of 2012, July 19th, 2012 highs at about the 6,080 level, or 6,800 level, excuse me, anchored to highs. The full pullback traded around the 7,660 level, and we have since then broken the short off of the prior highs, and we're looking for the ambush long on a 4-hour time frame. This full pullback into this full pullback into the 8,055 area, we are monitoring 15-minute extension shorts drawn from an anchor of an 82.92 to lows. This extension short has traded, got free, traded, got free, dipped in on a gap up, and has gotten free yet again. We have also now traded a ambush short inside of this level, so the DAX looks like it has the downside target of an 8,050 now that would fill this 4-hour full pullback, as well as the shorts to take us down into that level. On the 15-minute time frame, the FTSE has pulled back into its 4-hour long already. We're seeing a next in the series short offer resistance drawn from our prior swing high to our current low. We're looking for a push above the 65.40 area, where then we will anticipate, the ambush long and the swing reversal towards the 68.78 targets, and ultimately higher to longer time frame daily targets as well. But kind of watching these on all the indices, kind of watching them on a slightly larger time frame to make certain that we don't miss anything, any of the bigger levels here that are obviously trading. Which brings us to the S&P 500. Stepping out to a daily time frame, we have pulled back before the summer, early summer. In June, we pulled back into our daily extension long drawn from the September 14th highs to highs. This daily long defended an extension level, or defended the 618 line of its extension, and has upside targets of the 1734s currently. This summer's trading, going down to a 4-hour chart, very similarly actually to the FTSE 4-hour chart, has pulled into there we go. You can see the two trades side by side here. and the two pullbacks that are virtually the same trade on both the FTSE and the S&P. They've both pulled back into their big 4-hour ambush longs. They both have shorts against the long, and a break of this short against the long on either market, or both markets rather, would obviously give a smaller time frame setup in the direction of the larger swing. We haven't had that yet from the 4-hour perspective, as there is a full short against the long here. Every time we've had this in the past, though, where we've actually traded a long level, the short has eventually broken since 2008, every single time. Go out to a daily level and a daily chart, and I can show you exactly what I mean. The first major short since 2008 that I am referring to was the flash after the flash crash. The market traded into a full short off of highs. Drawn from the 800 level to highs, it had traded an extension long. So it had traded both its daily extension long and a full pullback. Eventually the full pullback broke and the market squeezed higher to long targets. Going same anchor new high then, once long targets were filled the following year. The next summer, the S&P 500 had a full short against its daily long. The full short eventually broke, and we continued on to the long targets. Every year, about this time of year, going into actually this year, was a great example of the short that traded in late August, actually almost to the day. It traded on August 30th and through September 1st. It eventually failed, but the market was generally range bound between those levels for the entire summer and going into the early fall. I see the S&P in almost an identical situation here on just a smaller excuse me for that, sorry, I had to sneeze. I see a very similar type setup, just on a slightly smaller time frame in the S&P. Kind of a fractal setup where we have the full short off the high that has traded and gotten participation. Excuse me, let me draw that up. Traded and gotten participation against a much larger long that either has traded or eventually will trade, which has traded in this case, and ultimately we could be sideways here for an extended period until it finally breaks. It's going to make it hard to be a trading on on smaller time frames, but so going down to a 15-minute time frame, however, the short off of our prior highs, the series of shorts rather, we had extensions that traded once, twice, then we actually blew out of targets, and drawn from the 1650 lows we began new extensions once, twice, 3 times, same anchor new low for a third time here, traded, broke, and upon breaking actually yesterday, we pulled into the full ambush long. So we are now in a series of longs coming up off of our lows, which we know are our big 4-hour ambush long. So the 1634 support level will be valid above a 1632 going into today's trading session. We have a 1635.75 gap fill, so we are anticipating a gap fill and a potential retest here of this 1634.75 support. But ultimately, the major support level is still down to 1629. So no matter what happens today, we're anticipating, very much so, some kind of we're anticipating support here, which the gap is front running, and eventually a rally higher back into a retest of the 1668s. I do want to point out, though, drawn from our prior swing highs at a 1667, half to lows now. It's not a valid take, but we are seeing a front run of this resistance level, which is the full short off the prior highs. So um, just please be aware that it is there. It looks like it's been front run by about a point, so 4 ticks, and we usually look for a 2-tick front run, so it's a little aggressive, but doesn't mean it couldn't potentially work, because it is obviously there. We have, however, just traded the longs as well, and it's kind of pick a side and get free. Excuse me. Alright, so that takes us into the nicey session today for the indices. The British pound, not much has changed since yesterday. We've traded from a 4-hour perspective. We are still looking for that full short off the high or the full long off the low. Neither one is traded. Going down to the hourly chart, you can see this a little bit better. You can see that full short here. Inside of these levels, we've traded an ambush long that has tested a 621.8 line, and we've also traded a short off the high that's tested a 621.8 line. And we talked about yesterday that we're looking for the break of one of these two levels to indicate the direction that will move, either down into the 154s or up into the 155.75. So neither has happened just yet. Going down to a 15-minute time frame, however, we are holding from just today's candle, high to low, a Globex short here. So I wanted to point that out and make note of that. The shorts are getting participation on a smaller time frame now, so that they do have the setup to take us to the 154. 64 is breaking that long and ultimately taking us down to the 154 area, where we can get a real test of the next in the series long from a 4-hour perspective, which is drawn from the 151 anchor to highs here. Okay, we are coming up off of much larger resistance, drawn from the 163.80 highs to our summer lows. Well, really it was the March low, but summer lows were virtually the same. And we have found resistance between the 156 and 157 area every time up. So this resistance level is clearly still holding, and it's valid until it's not. So from a larger time frame, that does put any long pressure on any long. And to me, I wouldn't take the 154s, knowing that we are still against that resistance level. In what is really an extremely long time frame wedge in the pound. We have just gone sideways in the pound in a 2,000 pip range for a number of years now. The euro. Stepping out to a 4-hour chart. Whoa. Some things on this chart, I don't know why they're here. Okay, there we go. I am anticipating a move back down to the 131s for the daily ambush or full long. The euro has had a resistance level here at the 135s on its daily chart, but it has also pulled into its full long. So keep in mind that we're coming up off of the all-time pullback, the 120-130 area, which is drawn from all-time lows to all-time highs on the euro. It's a full 50% long with a target up at the like 73 or 78 area. And that's one spot, 78. So we're talking like years. years horizon on that type of trade. The full short off of our power swing highs in 2011 to 2012 lows has held resistance here at the 135 area, and ultimately from the 2011 lows to the 2012 lows to 2013 highs, we've pulled into the full halfway back long as well. So it's a matter of which trade and which side is going to take over for a push and break of the opposite side's trend. Below 127, we revisit 121. Above 138, we squeeze to 141 targets in the short term, and ultimately all the way up to a retest of the 150 area. Okay, going down to smaller time frame charts, 4-hour perspective. I'm anticipating a pullback in the euro down to the 131 area. We have seen on a 15-minute time frame the euro get participation to the short side once, twice, and then break down in extensions here that have been in front run by now 8 pips here. They've been aggressively front run actually each time this extension is traded, drawn from anchor to lows, with the exception of the first 2 times. Then it went to a 6 pip and now is an 8 pip front run. We could potentially reverse engineer another level, somewhere in this to make it fit better, but this is technically the extension level that we are flagging inside of. So watching for downside targets of 132 currently. Stepping back out to a 4-hour chart, I do want to point out that we did have a series of longs twice here, and the second one has not quite gotten to target, so it could have a retest of the 132s. So in the short term, we've been, it's only 20 pips below us, so we've been looking for this move down to the 132 area because ultimately it was prior support on a number of occasions, and third time down here, I would not be a buyer because third time of a support zone is dangerous, especially knowing that there is a full ambush long below us at the 131s that I anticipate trading. The Aussie US dollar in clear-cut shorts on many time frames, stepping out to the 4-hour chart, drawn from the 95.25 anchor lows here. We've traded into our 4-hour short at the 91.90 area. Inside of this level, we traded an ambush short that came after breaking full longs off of lows. After breaking the 61.8 lines, we dropped the ambush short. It was front run by 10 pips. Nevertheless, has downside targets at the 88.60s. The downside targets for the larger 4-hour swing are the 87 level. Going down to an hourly chart now. Inside of this this setup, we've also pulled into a full long, drawn from the 90.73 anchor to 88.90 lows here. This full short in the short term has a downside target of the 88.60s as well. And going overnight, we actually pulled back into a full short off the highs and a second test of the 61.8 line here, but have really just broken both sides if you look at it that way. So for maybe a 15-minute perspective here on the Aussie, we are a little bit range bound between 89.60s and 89 even, so a 60 pip range here, but we are expecting continuation to the downside in a effort to get us to ultimately the 87 targets, but more importantly just 88.60s in the near term. We have held for today's just today's time frame and today's candle. We have broken the full long off of lows, and we have pulled into a full ambush short for today's candle. the Euro Aussie. Looking for a continuation of the extension drawn from a 49.53 anchor to lows. At a 4-hour time frame. Expecting potential support here at the 47.38s. Below 46.60s, expect a retest of the 44.30s. And then really, at some point, I am anticipating our full daily long drawn from the 31.90 anchor to 150.32 highs, and that exists at the 141 area. So 141.10s we could trade actually 700 pips down to that level and still be in daily long. So that extension needs to trade at some point, and this might be the swing reversal off a high to take us down to that level finally. But from a 15-minute perspective, we are in shorts, extension shorts still, that have traded multiple times, once, twice, and we do have downside targets. So please keep that in mind. Dollar yen, not much to say outside of the fact that there is a big old wedge here, and which way we're going to go out of this wedge, nobody knows it. You favor a break higher out of continuation consolidation patterns, but there's nothing that says it has to. So we are really condensing here, and unfortunately it's just a mess. So I would like to see if this is from an Elliott wave perspective, this is 3 down, up, and A, B, C, D, and E could be completed. So if there is a substantial rally in the dollar yen, expect it to far out, based on what we're seeing in the euro, US dollar, and the Aussie dollar, expect it to outpace all the other yen crosses, thus bolstering the US dollar across the board. Okay. Euro yen, we are still flagging in an extension short for the 3rd day in a row here, drawn from the 131.06 anchor to prior lows. Finally got its targets filled. Same anchor, new low now. We have a potential short at the 130.34s if this doesn't just continue lower, as it has been unable to maintain any sort of rally, and we just continue sideways for the 3rd day in a row now, really between the 129.60s and the 130.60s in this 100 pip range. So downside support exists at the 128.80s, and then stepping out to further back, we could see a full pullback all the way to the 123 area eventually in the euro yen. But we do have a few support levels between there and here and there. 128.70 or 80, 126.30, and 123 is finally that lower support area. But monitoring this 15-minute extension short in the meantime, as that's really the trade that most of us would be more concerned with. It's a 130.34 short in the direction of with a 129.30 target, stops above 130.50. And the Aussie yen, we have run into resistance here at the 87.96. We have an extension long drawn on a 15-minute time frame from the 87.13s to highs. I just see us between these two levels. If we continue higher, we do have a full ambush short resistance. I want to point that out at the 88.30s, and that's drawn from our 90.14 swing trade high to swing high to 86.40 lows. So the extension does have the ability to take us up and into this short level. I have this other swing high to low drawn up. It's not a trade I would take or normally draw up, but it is there. We've seen resistance at this level a number of times now. And this extension we are in has the ability to take us up into the 88.30 target, or 88.30 short, to which we would then have continued downside. That's about all I have for the dollar yen or Aussie yen. And finally, gold. Gold has pulled back into our 1390 support level. This 1390 support level is drawn from our July 23rd or 22nd highs at about the 1349 area to current highs at the 1434s. We're looking for an upside target of 1453 on gold. Below, let's just call it below 1377. We're looking for the full pullback to the 130.50s. All trades in the direction of taking us into the full halfway back on gold at the 1550 level. Anyway, monitoring gold on an hourly time frame, not really monitoring it on anything smaller at this time, and the reason being is the volatility of the swings have just been so big recently that if you are trading gold, you're going to have to do so with, I think, wider than normal stops, or wider stops that may not be as very safe for you to trade with. So that just means, I guess, reducing size. Anyway, we're looking for the move to 1453s in the near term, and like I said, below 1377, looking for a $77 decline all the way down to the 1305 area. All right, everybody, that's all I have for you today, and I think this week. We will be back with you on Tuesday. There will be a London. I will be actually out of town until Tuesday, so that might make Tuesday's London session a little hard to do. So I will see what I can do. I think at the very least I will have charts up. I may not have talking commentary, but I would be able to do chat and updating charts for us. So at the very least, London will be open with charts up, and I may not be able to be speaking because I will be traveling remotely, and So with that being said, we will be back with you on Tuesday, as Monday is a U.S. holiday and it is closed. Charts will be up probably until whenever Irish or Pete decides to close the room today, but probably right around the London close, things will get really slow, and markets will get shallow into the U.S. holiday weekend. So have a great weekend, everybody. Happy holidays have a great Memorial Day to those in the U.S. celebrating or observing, and we will be back with you as price action develops.